Okay, well, hello, everybody. I am so grateful for the opportunity to be presenting for you today. First of all, Happy New Year. Happy January 2024. I cannot believe that we are already into an exciting new year, but I got to tell you, goodbye 2023. Only looking forward to amazing things this year. And welcome to FICO Sense, to a white picket fence. So grateful to be presenting for you today. I want to talk a little bit today about finding opportunity, right? We want to talk about what the new year looks like, how we can transition our businesses, frankly, from being transactional to basically really being more relational. We want to find opportunity. And so today I'm just thrilled to be providing insights into all things credit. But before we do that, I want to talk a little bit about who is CredEvolv. My name is Tiffany Cross. I'm the Executive Vice President of National Sales. Absolutely thrilled to be presenting for you today. But CredEvolv is frankly a fintech platform that helps lenders and of course realtors take opportunities, right? We find opportunities wherever we can, and we essentially can partner lenders and of course realtors and their declined or low credit consumers to create a path towards loan or mortgage readiness. We have a track record of incredible success helping lenders close more loans and of course keeping your pipeline full, which is the entire goal of today's presentation. We partner consumers with nonprofit HUD credit coaches. Okay, so this is not a credit repair class, but I do want to talk a little bit about some of the solutions that we're able to provide consumers by way of partnering them with ethical, legal, and responsible, socially responsible nonprofit credit coaches. And typically, by the way, we're able to take your borrowers from a no to a yes in as little as 3 to 5 months. So it's not a heavy lift. Again, that's 3 to 5 months. Our process is super streamlined, very easy. We'll talk about that here at the end, but our team is second to none, and I could not be more excited to be sharing a little bit about credit with you today. I have been in the credit repair industry, or what we call the consumer hardship industry, for nearly 20 long years. I owned and operated my own successful for-profit credit repair company for about 16 and a half years here in Southern California. And then I joined actually the CredEvolv team, brought my entire team with me just a couple years ago because I saw the changes in the industry. I was so incredibly excited about the technology that CredEvolv was bringing into the marketplace and really the good that we're doing for consumers. So I am so thrilled to be partnered with you today. So thanks for popping on. And let's do a little bit of talking about what's going on in the industry right now, right? So there's no surprise or no secrets that this has been really a very challenging last couple years. We know that consumers that went through COVID, then the post-COVID, then frankly, the recession, whether some people want to say we're in one or not, but consumers have really had a very difficult last couple of years. And so when you're talking to your consumers, when you're talking to your home buyers, your future home buyers that really want to, frankly, they want to be a homeowner. And they've been told no time and time again. Frankly, many of them have gone on Google or TikTok and they've been researching solutions and feel no closer to an answer than they did, a year ago or 2 years ago. And so our goal is to help consumers get out of that financial cul-de-sac and find solutions so that within the next 3 to 5 months, instead of hearing no, they can hear a yes. And so we recognize, by the way, that 1 in 4 of your borrowers is going to need a little assistance before they're going to be ready to purchase a home. And so what is the importance of credit literacy and how does it influence you or impact your business? We know that many times consumers, before they can begin the journey of home ownership, they're going to need some help with budgeting, right? I don't personally love the word budgeting or the term budgeting. I don't like to be told no. Frankly, I don't think very many of us do. So I like to say spending plan, right? So many consumers need help sitting down in a structured environment with a nonprofit HUD counselor, for example, to really determine how much money am I going to need to be able to save for a down payment of a home. Frankly, I only have so much money coming in, many consumers will say, and yet it feels like I'm just hemorrhaging. How can I be on the other end of this story? And so lots of your clients are going to need assistance in that. And CredEvolv can absolutely partner with you and your borrower to really help them identify best practices and re-identifying ways that they can stop spending money, maybe frivolously in some areas, and begin wisely saving money for what they really want, which is to be a homeowner. Many are going to say, well, yes, but how else does credit literacy impact my business, right? Why is this even important for me as a realtor to know, or a lender to know, frankly? Well, in order for a consumer to know what choices are available to them in mortgage selection, they're going to need help. They're going to say, okay, well, obviously I'm not a VA borrower because I didn't serve in the military, but what does FHA look like? And what does conventional look like? And are there USDA loans available to me? And what should I be thinking about? And so, of course, sitting down prior to falling in love with a home is always the best case scenario. But we recognize that in many cases, the cart may feel in front of the horse a little bit, and consumers come to you in many different stages, right? And so you as a realtor or a lender, frankly, have the ability to become an advisor, right? We don't want to be transactional. We want to be relational. And so when you start listening to conversations that consumers are having, whether it's on social media, or it may be in a networking group that you belong to, and people start talking about debt and credit and financial literacy, and frankly, the word home equity, right? How do I manage my home equity? What does it take to be financially resilient, right? I know when we talk a little bit later, we're going to identify some generational credit topics. Many of your borrowers that are going to be wanting to purchase in the year 2024 may have been teenagers back in 2008, 2009, 2010, and perhaps their parents went through the foreclosure crisis that we had back in the crash, right? And so home ownership may have a little bit of trauma around it for some consumers. And so how do we take consumers from I'm scared to purchase or I'm afraid of foreclosure, and how do I avoid those types of things? How can I be financially resilient and a homeowner? These are topics, and there's so many that are surrounding the topic of credit literacy. And so if you are thinking to yourself, what type of information can I be posting on social media? What types of education can I be bringing to consumers for first-time homebuyer workshops? If you will come with me today, let's process this together. But my goal is that perhaps you would consider putting in your arsenal the opportunity to talk to buyers about credit literacy, financial literacy, and creating the know-how for consumers to feel confident about the idea of home ownership in the future. Now, we recognize, as I mentioned, there are a myriad of factors creating the perfect storm for borrowers right now. Student loans are at an all-time high, right? We know that during COVID and frankly, a little bit post-COVID, there were all kinds of, programs available where consumers really weren't required to make those payments. Those financial obligations that student loans have on consumers it's a heavy burden for consumers. And so oftentimes when you're talking to consumers about wanting to become a homeowner, they might say to you, I don't know how student loans are going to impact my buying ability, right? Does that debt influence me? Does it impact me? And you being the waymaker, the solution provider, and saying, you know what? I have a team. I have a team of credit experts that are nonprofit HUD counselors that can provide you with all of that information so that you actually have a roadmap and a creative solution so that you don't have to hear the word no anymore. We also recognize that inflation, the cost of goods and services, has increased substantially over the last couple of years. And quite frankly, we work with clients in all 50 states. I mentioned earlier that I'm actually in Southern California. Pray for me. But at the end of the day, gas prices, the cost of groceries, people are living paycheck to paycheck right now in every state, but in certain states they're hit even more heavily, right? So having that compassion, that empathy, and listening when you're talking to your home buying, your future home buyers about things like, I was underemployed during COVID. And quite frankly, now I'm doing Uber, or I'm doing 2 things or 3 things instead of my one job that I used to have. Underemployment is absolutely impactful. And we recognize that sometimes that in and of itself creates a conversation for HUD counselors to say, is this an income issue? Is it a budgeting or a spending plan issue, right? What is really being the trigger for you, and how can we help you across that finish line? Now, outside of inflation, student loans, potential underemployment, or frankly, unemployment in general, we also have things that are impacting consumers that never used to be an issue, like increased identity theft. Raise your hand if you spent the last 3 months buying things for people for Christmas or the holidays, for Hanukkah, and going, I probably shouldn't have used that website. I'm not totally sure that it was secure. Or maybe you even received one of those scary email alerts or text message alerts that somebody applied for credit in your name, right? We know that that is on the rise. And we have younger buyers, future homeowners, that are saying, gosh, I don't even have traditional credit cards yet because I use things like Cash App and Venmo and some of these other wonderful platforms that on occasion have the ability to frankly put your information out on the dark web, right? We need to be careful about those things. And there's solutions for consumers that perhaps want to be homeowners, but went through a treacherous period of time where perhaps their identity was stolen. Believe it or not, we do see that can often be a family member that has taken advantage of their significant other or ex, or even their children, unfortunately. So these are conversations that financial literacy and frankly, people that are saying, I don't really know how to purchase. And these are some of the things that are impacting me. Now, the elephant in the room, my friends, is credit card debt. We have never, ever, in I think the history of our entire American society, seen people living so heavily or relying so heavily on credit card debt, right? And that is a very scary thing for consumers. Do they need debt settlement? Do they need debt management? And if they do, how is that going to prolong or maybe delay the home ownership journey? Now, you as a realtor might say, gosh, this is outside of my wheelhouse. I hear these types of things, but in the past, I, as a realtor, again, these are what realtors often say, I usually don't work with people that don't have good credit, or I try to avoid circumstances where people aren't ready to purchase. In fact, I've even had realtors say, you know what, fortunately, I don't need to partner with a credit expert because all of my clients have good credit. And I caution you to avoid statements like that because credit issues impact 1 in 4 buyers. And oftentimes we see that, quite frankly, life events like divorce, business dissolution, frankly, COVID, right? Bad things happen to really good people. And when you say, I don't work with credit challenged clients, you're essentially saying, raise your right hand, I don't work with clients that have had unfortunate life events, right? We don't want to say that. We want to be way makers. And today, I want to help encourage you that from here today forward, you're going to say, I don't say no to anybody. I believe that home ownership should be in everyone's back pocket. And I know that road to home ownership might look a little bit different for each person, but it doesn't have to be that home ownership is for everybody else and not for you, Mr. Consumer or Mrs. Consumer. So I am going to come alongside you, being you, the realtor, and I'm going to create a solution. I'm going to be a positive influence in creating a way forward, right? So things like student loans, inflation, underemployment, budgeting concerns, life events, COVID, those types of things are real. They're relevant. As I mentioned, conservatively, it's 1 in 4 buyers. So I want you to be listening for opportunity this 2024. When you hear any of those words in conversation, I want you to say, you know what? Come alongside me. I'm going to create a way forward for you. And I'm going to show you how you can become a homeowner by working with a nonprofit HUD credit coach. Okay. Now, implications for real estate agents and home buyers. We recognize that, mortgage payments become less affordable when you have credit issues. Sometimes we see that individuals that have a low 400 or 500, low 500 FICO score, that interest rate that is associated with that low credit score can make home ownership feel very much out of reach for consumers. So just simply taking a consumer from a low 500 FICO score into the mid sixes, which by the way is pretty standard for a mortgage loan, just simply investing that 3 to 5 months of time and effort, a consumer can in many cases, very easily afford an interest rate. And by the way, good news, we're seeing some shifting in those interest rates as we speak, which is very, very exciting. Now, what are some concerns? We know that 9.1% of home purchase applications were denied in 2022. We don't have the numbers for 23 quite yet, but they will be available shortly. But 9.1, almost 10%, you guys, of the people that were out even applying were denied in 2022. We know it rose pretty substantially in 23. And we also know that 25%, just under 25% of refinance applications were rejected in 2022. Now, what we're not talking about is all of the people that never even began the application process because they were told, no, sorry, this isn't for you in some way, shape, or form, whether it was on myfico.com or any of the consumers go to for credit monitoring. So we know that that's very, very scary for consumers, and it doesn't need to be. Now, 42% of Americans say their credit scores prevented them from obtaining a financial product in the past year, right? Rising to 74% among those with poor credit. So this is a big, big need, big, big need. And I'm so incredibly grateful that you're visiting with me today so we can talk about how this can change and how we can shift the mindset. People who work with a credit counselor achieve knowledge that lasts a lifetime. When home ownership feels unaffordable or out of reach, this is exactly the time to be working on improving one's credit. Now, what does that mean? I like to use the analogy of joining a gym and hiring a fitness trainer, right? If I said it's a new year, new me, I want to lose 40 pounds, 50 pounds, 100 pounds, whatever that amount is, 5 pounds. And I join a gym and I have a trainer and that trainer says, Tiffany, congratulations, you joined the gym. I've got a plan for you. I need you to work out 3 hours a day. I need you to only eat chicken and broccoli and drink water, and you're going to hit that goal. Good luck. Call me when you've done it, right? Well, the chances of me having the time to go to the gym 3 hours a day, God bless me, I can barely do 30 minutes, but 3 hours a day, probably not going to happen. The chances of me eating chicken and broccoli for the next 6 months only, probably for sure not going to happen, right? So giving somebody a program or a piece of paper and says, here, go do these things and call me when you make it, that's not going to work, right? And unfortunately, oftentimes when consumers feel discouraged, whether they applied online and they didn't really have that handheld approach, or they weren't, introduced to a HUD counselor, right? That can sit down, and not a salesperson, by the way. We're not talking about a for-profit salesperson. This is a nonprofit, government-approved and recommended solution, right? That really takes education very, very seriously. And when we create education, that is a lifelong gift that we're truly giving people the ability to gain knowledge, to be credit smart for life, right? Learning budgeting tools, budgeting things. It can be really fun, frankly. That spending plan can actually be really rewarding when people say, I had literally no idea that I had $300 more a month than I didn't, I was spending it in the wrong way. And we show them the right way forward. I can tell you it's really fun and extremely rewarding. And they're going to remember you because you were the one that cared enough to bring forth opportunity, education, and frankly, a partnership and solution. Again, we're trying to get away from being transactional and more relational. Real estate is all about building and keeping and earning those relationships, right? And this is what we're really excited to be able to do. Now, there are a lot of questions that consumers have. I could probably do a whole webinar on this topic alone, right? But I want to go through some of the top 10 consumer questions that consumers are asking about credit and debt and how it impacts them and their ability to become a homeowner. Now, I'm going to mention these to you because many of you will come to me or have come to me or will come to me in the future, hopefully, and say, Tiff, I really like this. I like this topic. Would you mind doing a video on this with me? Can we do an interview? Can we create social media content around these ideas? And the answer is absolutely. I'd absolutely love to do that. Because again, if we're providing value to our network, right? We're not selling them something. We're providing value. And by doing that, you're essentially selling them a home down the road. Now, how is my credit score calculated? Now, this is kind of a basic question. You'd think that many of us would know it. Maybe some of us do, some of us don't. But the issue is that very few people were taught this in high school. Frankly, I know I wasn't. For those that went on to college, that was me. Quite honestly, nobody ever told me about credit. It was sort of the school of hard knocks. And in many cases, it's just about doing it wrong, learning the consequences, and then going, oh, wow, how come nobody ever told me this, right? Now, the other confusion is that there's so many different scores. There's consumer credit scores. There's a Vantage score, which, by the way, is the one that consumers get on Credit Karma. And then there's FICO scores that only FICO provides. And oh, by the way, FICO gives us many different scores: an automobile score, a credit card score, right? We have, of course, mortgage lending scores. We have installment loan scores, personal line scores. So a FICO score is not a one size fits all, right? There's a vast amount of different types of scores available for consumers. And how stinking confusing is it to go, well, I've got a 900. Well, the FICO score only goes to 850. So what score are you looking at? Some of those free websites like Credit Karma provide Vantage scores or consumer report scores. And consumers are very, very confused about what the difference is. Now, remember, in real estate, we're using for now the FICO 2, 4, and 5 model. 2, 4, and 5. And we've used it in the mortgage industry now for almost 30 years. Now, stay tuned because another webinar coming soon is that there will be a shift coming soon within the next year or two in mortgage lending where they're going to move to a different version of the FICO score. But for now, it is absolutely relevant that consumers understand all 5 factors of the mortgage FICO score when applying for a home loan. So again, these are questions that take more than just 5 minutes to answer, but consumers really need to know that their payment history influences 35% of their score. 35%, we'll get into it here in a minute. But that one 30-day late can drop their score 60 to 80 points. And oh, by the way, paying that account current after being late does not improve your score. Consumers don't know that, right? So lots of misconceptions out there, lots of great credit tips that you could be providing your buyers. Now, how does my credit score affect my ability to qualify for a mortgage? Now, this is obvious, right? If you have low credit, often you can be denied for a mortgage, but we also need to realize that sometimes having low credit just simply means I'm not denied, but it's out of reach because the interest rates are higher with lower scores. And guess what? It doesn't have to be a prison sentence. A lot of people, and quite honestly, when I say a lot, hundreds and hundreds and hundreds of clients that go through our nonprofit agency counseling will say, I have had bad credit for 10 years. I had no idea that it didn't need to be part of who I am and that there are things I could have done years ago so that I could have become a homeowner. So again, we don't need to have consumers in that financial cul-de-sac or hamster wheel feeling discouraged. We can help them. What is a good credit score range for securing a mortgage? Now, did you know that most consumers think that they have to be in the 800s to be a homeowner? Or they need to be in the mid 700s to secure a mortgage? Crazy, right? And it's almost more challenging to buy a vehicle many times than it is a home when you're looking only at score. So a consumer can, generally speaking, secure a mortgage anywhere from 640 to 680, sometimes even lower. But the interest rate, of course, it will impact the consumer. But kind of a fun fact, a consumer can move a 500 FICO score to a 640, oftentimes within 3 to 5 months. That's a huge jump. And again, if they do nothing and put their head in the sand and they don't start really addressing things, it can be years down the road before anything ever changes, or if ever, frankly. Okay, how can I improve my credit score before applying for a mortgage? Well, like I alluded to earlier, sometimes consumers think that bringing an account current that was derogatory for 5 months is going to influence the score positively. Not necessarily. In fact, we've seen that paying off collection accounts can actually drop a credit score. What in the what, right? How come I brought an account current and they took points away instead of giving me points? Well, there's a reason, right? And there's many reasons that I won't get into today, but some of it has to do with what we call the date of last activity. Sometimes when you reset or re-age an account unintentionally, it can be more harmful than helpful. Consumers ask things like, do past late payments and other credit issues affect my mortgage? Yes, absolutely they do. Now, remember, when we are talking about credit scores, consumers are often being confused by underwriting guidelines. In order for a consumer to get qualified or be qualified for a mortgage, they have FICO score goals they have to reach, but they also have your mortgage underwriting application criteria that has to be met. Consider it a train track. The consumer needs to have both being provided to them at the same time. And unfortunately, when consumers go onto Google and they find these hacks or people that went on Amazon and bought a book and then started charging all these exorbitant fees to consumers and frankly don't even know what they're doing. Again, very discouraging for consumers, and it doesn't need to be that way. What role does debt to income play in the mortgage approval process? Can I qualify for a mortgage with limited credit history or no credit score? For those of you who are going to be working with Gen Zers, Gen Xers, there's going to be some, as I mentioned before, that have very thin credit profiles. Perhaps they were in the military and they let their credit become dormant. Or we might have silent generation that frankly was cash only. They just they were raised a little differently. Perhaps they don't love the idea of having to have credit debt at the older ages past retirement. Those individuals may have some concerns about establishing positive credit. And by the way, there's some smart choices that we can give for younger people just starting out, as well as maybe retirees, and showing them how they can make their credit work for them without being in debt, right? What's good credit look like versus bad credit? How long does negative information stay on my credit report? Does it need to be there for 100 years? No. In fact, it only stays for 7 years. Now, remember, just because something is on a consumer's credit report for 7 years or even 4 years or 3 years doesn't always mean it's negatively impacting them. Perfect example is that sometimes consumers will see inquiries on their credit report. And they're going to say, well, I was told that this was only going to influence my score once because I was shopping for a vehicle, or I was homeowner applying for homes. How come all these inquiries appeared? Just because they appeared on the credit report does not mean that they're always impacting the scores negatively. And that's part of what our HUD counselors can really sit down and do a deep dive with your buyers to show them how that works. Okay. Are there first-time homebuyer programs or loans available with people with credit scores? Absolutely. Down payment assistance. What does it look like? So in a nutshell, this is just a short recap of some of the questions that homeowners are asking, future homeowners. And I got to tell you, if I were you and I was sitting in this webinar today and I'm thinking, okay, Tiffany, this all sounds great, but how does this work for me? What do I do with this information? If you know that 1 in 4 buyers that are sitting on the fence right now, they're sitting on the fence because credit is the one thing keeping them from being a homeowner, how about creating social media content? For those of you who are looking for creative content, I'm going to challenge you after this webinar to go to myfico.com, myfico.com. And it's a website that's, of course, FICO, where consumers can go buy a copy of their credit report. It will not ding them. It's not going to be a hard inquiry. It's not free, but they're going to get a copy of all 10 versions of their FICO score, not the Vantage score, not the one that you would see on Credit Karma that's not used in mortgage lending. Now, when you go to that website, you don't have to buy a report, but you can click on the education tab right there at the top. And then once you click on the education tab, scroll down to the middle of the page where you're going to see frequently asked questions. Click on any one of those questions. Most likely they're going to be one of the ones that I've put up on the screen today. And click on it. Take a look at it. It's content that people are asking or questions people are asking. Start using resources like that in your social media. Did you know? Create little videos. In fact, if you want to be an A student, go over to ChatGPT, take one of those questions off of MyFICO's website and put into ChatGPT, create a 60-second video script that I can use for Facebook on this topic. Done, right? And then we're going to start using video this year. I know I'm raising my hand. I'm going to be better, more consistent with it. For some reason, I have a thing with it, but I'm going to do better. But start using relevant content. And again, we're not talking negative. We're not going to say, oh my God, did you know all these people are getting denied? We're going to say positive things, positive messaging, because today you are a waymaker, no buyer left behind, and you can truly start saying, you know what? I believe everybody should be a homeowner and I am your waymaker, right? We're going to be relational, not transactional. Now, I want to show you the 5 factors of the FICO score under the model that's currently being used in mortgage lending. And I want you to pay attention to that orange section. Did you know that past delinquencies influence the score by 35%? Now, if I were to ask you, before showing this to you, how important is your payment history to your FICO score? Most of the time, people say 90%. Well, gosh, it makes sense, right? I pay all my bills on time. I should have perfect credit. But did you realize that only 35%, yes, the biggest section, but not the whole pie, right? 35% of the score is the payment history. But just below that is what we call the credit card utilization factor. Or in this case, on this pie chart, it says debt ratio. Now, really what we're talking about here is your credit card utilization. A consumer should have no less than 3 credit cards, not car loans, but revolving trade lines. That's what we call trade lines, revolving lines of credit cards. And just as important as it is to have those 3 credit cards open, right? You never want to use more than 25%. 25 to 35% of your credit card is the most you ever want to use on any one card. So what does that mean? Do you need to use 35%? No. Do you need to pay it off in full every month? No. And quite frankly, sometimes we find, in fact, I just saw this on my own credit report the other day, paying it down almost off can sometimes influence the score quicker in a positive way than paying off in full. Make sure that you're telling your consumers, be careful. Just because it makes common sense doesn't always mean that it's FICO sense, right? FICO doesn't always play well in the sandbox with financial sense and or common sense, which is, again, makes no sense. But nonetheless, I'm just the messenger. Consumers need to realize, how do they really capitalize or make positive changes to their credit score by understanding how to use their credit impactfully. And again, this is more than just a 3-minute conversation, but average length of credit, mix of credit, and credit inquiries make up the rest of the score. Now, if you have a home buyer that says, or future home buyer that says, I am always in the 500s. I don't really have any recent late payments, but I want to be a homeowner and I've heard that I need a 640. Why is my score stuck? Why is my score stuck? A nonprofit HUD counselor can do a deep dive into that buyer's whole story and look at their credit mix, look at their inquiries, look at their payment history, identifying whether or not they have collection accounts that do need to be resolved. Perhaps they have missed payments, a repossession, student loan lates, whatever it is. Every single buyer or consumer has their own credit fingerprint, and it needs to be treated as such, right? There's no one size fits all solution. And that's why you have to be so careful that when you're taking your friends, your family, your future clients and providing them with a referral for a credit expert, you really need to make sure that credit expert has your family member, your friends' best interest in mind, and frankly, that they really know what they're talking about. Okay, some of these things we've talked about today are going to help you transition that real estate business of yours from sort of stuck, like, right, we just talked about scores that can get stuck. You might be stuck right now saying, well, where'd everybody go, right? Where did everybody go? 2020 was amazing, and then it wasn't, right? Now we're in a whole new year. January is the best time to really start adopting this advisor mindset. Get out there, really listen, start listening with empathy, right? We want to build long-term relationships. I'll tell you, when you've helped a client that was not able to buy a home, become a homeowner, maybe they were a renter. We've got some cool stories where it was individuals that first generation homeowner, and they will not stop referring their realtor to every single person they know because they saw that you cared. And so, you build those long, really outstanding relationship. Transparency and honest practices integrated into technology, right? We got to use technology, guys. This is so incredibly important. One of the perks about referring clients to CredEvolv is that not only do we partner your credit challenge buyers with solutions with our HUD counselors, but we keep you, the real estate partner, in the know the entire journey. You're going to get updates every single month on every single client that you've referred with actual FICO score improvement updates. We're going to constantly send email updates, as well as provide you with a portal where you can literally log on to our website, click on any single client that you've referred to CredEvolv, and see exactly how they're doing in the program. And those emails and those updates that we're sending you allow you to stay engaged with your client. Keep them, we want to keep you engaged, right? So that you can actually say, hey, John, I see that you are still working with CredEvolv. They're keeping me posted every step of the way. Congratulations that you're doing so well in the program. Should I be sending you information on the local schools and the areas that you're interested in buying when you're finished with CredEvolv? Those are the ways to stay engaged and to keep those clients right there. Now, once you've had your first success story, right? And we've graduated your client out, they've already got their keys in hand, and you're taking those fun pictures with them because you listened early on, you created a solution, you stayed engaged. Now you've got some really cool content, right? You want to contact your local media, share that you are the socially responsible, tech forward realtor in your market, and that you work with every buyer, no buyer left behind, and that you're a waymaker, and use that in networking and community engagement opportunities. Now, I would love to challenge you to take some of these ideas, think about, where are you impactful? Where are you influential? Are you in NARREP? Are you in Women's Council of Realtors? Are you active in your church or in your community? Are you active on a Facebook group? Where are you impactful, right? And how can you become the advisor in all things related to real estate? And keeping in mind that credit is going to be the one in 4 buyers are going to say, wow, I did not know student loans impact in this way. And they're going to private message you on Facebook or LinkedIn or wherever that you are, but be consistent. I know for me, I like to post every morning or, certain times of the day. I'll go on, I'll have my coffee in the morning, and about once a week or twice a week, I'll post a credit tip. This year, I'm going to try to do more of it on video. But as I mentioned before, My FICO is a great resource. Use ChatGPT, come up with some cool things that you can do, but be consistent and remember that it's all about becoming more relational this year, right? We want to be more of an advisor and less transactional. Now, a couple other ideas before we jump off today. I want you to be thinking about different generations, right? We've got Gen X's, which are 1965 to 1980. And I think that's me. Am I in there? Yes, I'm in there. Gen Z's, 1997 to 2012. Well, start thinking about what is their why, right? Every buyer has a different why they want to purchase, what means something to them. But then there's maybe some whys that are unique to certain generations as far as why I haven't purchased, right? And I alluded to that before, where there's some consumers that really are kind of terrified about walking out what they saw their parents go through during that, maybe that home crisis before. And so they might be kind of terrified about that. They may be less about establishing generational wealth, but actually maybe more interested in purchasing a home because rent is so painful. Sometimes talking about the pain of renting is more impactful than the benefits of buying. So just understanding different generations and what speaks to them. And again, we can't be, generalized, but we have to be empathetic. And so if you go on ChatGPT or any of these really fun resources and say, provide me with some credit information that impacts millennials specifically, you might have student loan information pop up and just gives you some really cool suggestions about what you can be creating and sharing with your buyers, future homeowners, to create interest. Now, create a solution mindset for buyers in a discouraged market. I mentioned this over and over. Today, you are a waymaker. I want you to go print that on your business cards. Am I aging myself? Does anyone use business cards? I have my business cards. But put it on there. I'm a waymaker, real estate waymaker, right? Clients are more likely to trust an agent who's optimistic and supportive, especially during their challenging times. It just reduces stress and anxiety. I've talked about how it fosters a positive atmosphere, gain more word of mouth referrals. I had a fun story where a realtor had referred one of her credit challenge clients to CredEvolv, and CredEvolv, within 3 to 5 months, helped that person become a homeowner. And it's cool because that particular individual started doing Uber on the side just to start making a little bit more money. And she said that was the coolest experience because that Uber driver literally hands her business cards, the realtor's business cards out with every passenger that gets in her Uber because she was so grateful for the assistance and the relationship. So you just never know who you're going to speak to that's really going to be moved by your investment in them. Gain those word of mouth referrals. And frankly, it's just going to enhance your entire business to be not saying, I don't work with credit challenge clients, right? That's like saying I don't work with individuals who have had any amount of difficulty in their life. So my hope for you is that through the next couple months, you're going to start listening into turning those no's into yeses and how we can basically find that opportunity through a service mindset, right? Serving others, providing service and goodwill and empathy is always going to create excellent reputations and, of course, an excellent client service experience. Now, I am promising to keep it shorter than short and sweet today, but I kind of really would love to have another opportunity to work with you individually. I actually put my cell phone number on here. We partner with realtors and lenders nationwide. Absolutely love working with your buyers. Love working with you too, though. So I want you to take down my number, take down my email. CredEvolv would absolutely be thrilled to work with you and your buyers. I'd love to have a 5-10 minute call with you. We could talk about videos. We could talk about putting together some projects for you, enhancing your social media content. And if you're saying, you know what, I've got a client, I've got a guy that needs you, or frankly, I might need you. Go ahead and scan and bookmark my page. It'll give you an opportunity to connect clients to us for, by the way, a free consultation, which is very, very important for your buyers. Again, we're going to turn those no's into yeses and become waymakers. So I just want to say thank you for hopping on today. I'm absolutely thrilled to be partnered with you. And I'm looking so forward to many, many successful months in the year of 2024.